Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets are off to a mostly positive start after a sharp correction yesterday. Treasuries remain near their recent low while oil prices were steady. The British Parliament will now take control of the Brexit process after Prime Minister Theresa May conceded that she does not have enough votes to get her deal through Parliament. SBI Chairman Rajneesh Kumar tells Bloomberg Quint that he finds immense potential in Jet Airways and that the lenders will look to exit their stake within the next 2 months. And Apple has launched a magazine subscription service last night called Apple News Plus, access to which will be available at $10 a month. And drama in the Thailand election continues. After having been delayed twice already, results have now been put off until Friday. Let's talk about the session in the US. US stocks closed mostly lower on Monday, but the losses for the averages were marginal after the heavy selling that has been witnessed in the recent past. Investors obviously continue to fret over the inversion of the yield curve that you saw at the end of last week. The Dow, however, bucked the trend to rise as shares of Boeing rallied after recent losses. Bloomberg's Renita Young tells you more in this report.
Here in the U.S., we see equities mostly falling, with the tech stocks really dragging on the S&P 500. Meanwhile, we do see weaker data as well as a move away from tighter monetary policy by the global central banks, really shaking investor confidence there. Meanwhile, we do see U.S.-China trade talks, which could provide support moving forward. We also saw Apple, which gave a flurry of announcements today on its services. Shares slump. We saw that Apple announced it'll have a new TV streaming service, by the way, as well as a new Apple credit card, which sent some credit card shares down but since recovered, and an Apple Arcade gaming service, which sent gaming stocks tumbling. We also saw across the asset board Treasury sending benchmark yields below 2.4% for the first time since December 2017, as well as the 10-year Treasury yields sliding on Monday after the 3-month 10-year yield inverted last week for the first time in a long time on the Federal Reserve decision not to raise interest rates for the year of 2019. We also saw the U.S. dollar slip against most major currencies, with the Bloomberg dollar index ending lower. And that's a look at Monday's Wall Street action in New York. I'm Renita Young for Bloomberg News.
All right, now we're joined live by Bloomberg's Rosalind Chin, who's telling us everything that's happening in the Asian markets this morning. Good morning, Rosalind. Seemingly, some of these Asian markets which saw severe cuts yesterday are clawing back some ground.
That's right. What a difference a day makes. So this time yesterday, I was telling you how gloomy things look today. Pretty much across the board, we are seeing green, and we've got the MSCI Asia Pacific Index making gains of about 1%. Now, of course, we did see a part of the US Treasury curve invert, and it does seem that a day later, or after a day since Monday, we have seen less panic. So, a bit of an understanding that maybe, even though it's often seen as a harbinger of recession, maybe a recession isn't going to happen straight away, because that's unlikely. And even if it does happen, it may not even happen at all. So there is a little bit of more sort of less panic coming in today, and a little bit of optimism. We've seen that U.S. trade talks with China are resuming with a high-level delegation due in China today. We're also seeing a little bit of movement there in the UK in terms of Brexit and all the votes that have been going on in Parliament in the last few hours this morning, in fact. But across Asia, we see the Nikkei up by 1.7%. The Topix making gains of more than 2%. The Kospi making gains as well. Hang Seng, Shanghai Composite and the CSI 300 all up today by about just around the 0.5% mark as well. Now, I just want to take a look at a few interesting companies which have been moving quite a lot today. Samsung, that is losing 0.9%, which is interesting because it is the largest component of the Kospi, yet the Kospi is still managing to hold on to gains of about 0.25%. Samsung, the world's biggest chip maker, saying it's had a surprise profit warning ahead of its results due in April, saying that first quarter results will fall short of market estimates, and that is due to a slump in memory chip prices. Elsewhere in the region, we've got Nintendo going the opposite way, up by nearly 6%. That's the highest in 7 weeks, as a Wall Street Journal report says it's going to launch one new Switch model as soon as this summer, or maybe two even. It's of course the hybrid gaming system that's been very popular for Nintendo. And Cathay Pacific here in Hong Kong up by 3%. South China Morning Post reports it's agreed to buy Hong Kong Express, and that is Hong Kong's only budget carrier. Cathay Pacific seems to be making gains so far this morning on the back of that. So all over the region there are little shoots here, and they're showing some signs of optimism, and overall the mood definitely has improved since yesterday. Back to you.
Thanks so much for that, Rosalind. Well, let's talk about what's happening in the UK. British lawmakers seized a measure of control over the stalled Brexit process from Prime Minister Theresa May, setting up a series of votes that could dramatically alter the course of the UK's departure from the European Union. Now, Bloomberg's David Finnerty has all the latest developments in this report.
And all that actually means is we actually have even more uncertainty. If you put all these outcomes on a probability distribution, every outcome has greater probability. One thing that now has to be factored in is the probability of actually a general election, believe it or not. And that is because Theresa May is obviously losing control without question. So there'll be could be a leadership challenge. But even beyond that, if the indicative votes end up saying we want to kick this can well down the road and maybe have a second referendum, the people in the Conservative Party that are very pro-Brexit, well, more than likely not going to like that. So there is a danger that the Conservative Party may actually implode. You'll see more and more people go against Theresa May, so there's already signs of that. So that's one outcome that wouldn't be good for sterling. Second is, even if the indicative votes do actually come out with a general consensus, the question then is, will Theresa May decide to go with that consensus? It's not a binding vote, it's just indicative of what they would like. And remember, the EU has to agree. Now, hypothetically, you'd assume that if they did reach a consensus, it would be a milder form of Brexit, which for sterling would be positive, and the can would be kicked down the road. However, the third version, what if there's no consensus? Now, if there's no consensus, really it leaves two options on the table. It really leaves no deal or Theresa May's deal back on the table. Now, ironically, there's a chance that if between those two options, Theresa May's deal may actually be passed, which would be positive for sterling in the sense that it removes uncertainty. But, of course, the no-deal option there, which would definitely not be good for sterling. So sterling doesn't know which way to go right now. So it's all being manifested in implied volatility. If you look at 3-week implied volatility or 1 month implied volatility, they're already going up. In fact, 3-week, which covers the April 12th election, or vote, I should say, is actually nearly as highest since 2016. Europe doesn't really want a no Brexit either, because obviously it's going to be impacted. The UK is one of its major trading partners, so all the economies in Europe will be impacted negatively to this. So it would be quite happy to kick the can down the road, and you would certainly hypothesise. But again, Europe's going to say, look, we're only going to kick the can down the road if there's really a reason for doing this. If there's no real legitimate reason, if we're just postponing the inevitable, then let's get on with it. But given that the Eurozone economy has its own problems right now, the idea of another adverse shock would not be positive for it, and hence would not be positive for the euro. Hence, we're seeing the euro really going nowhere because, again, it is trying to work out what's going to happen.
All right, now on to an update from elections in Thailand, where the declaration of the results has now been put off till Friday. Remember, we told you yesterday about the results being declared at 2 p.m. local time. That didn't take place. Former Prime Minister Thaksin Shinawatra and the current military establishment are jostling to secure a majority in the 500-member lower house. Margot Tawi of Bloomberg News brings you all the details from Bangkok.
It's really a deadlock at the moment. We've got both major parties claiming victory. They will both have to try and form coalition governments. The numbers will be very tight. It's a bit of a deadlock at the moment. It seems difficult to see that there would be a functioning lower house of Parliament emerging from this. There is a 250-seat Senate, which will basically determine who will be the Prime Minister and how any government that is formed can go ahead, and if it can actually effectively govern. You mentioned there's a lot of irregularities that have been reported. There's a lot of complaints. it remains to be seen how that will play out. The Election Commission has said that it won't release the full numbers until May the 9th. So that's quite a long way away. Remains to be seen what will happen between now and then. There is a coronation. The King will be coronated early in May, and one imagines that things will be kept quiet until then.
All right, we'll keep you posted on all those developments from the global stage. But for now, let's turn back to India. Agam Vakil is here to tell you all about the trade setup for the day and also what's happening in the futures and options space. Morning, Agam. Well, bonds globally continue to be in focus, but at least the equity markets in Asia seems to be clawing back some ground. How are we looking in India?
For now, we're expecting some amount of sideways movement for the benchmark indices, as indicated by the SGX Nifty, which is marginally in the green. But how was the day yesterday? Well, we did see some more weakness in the benchmark indices, a cut of around 100 points for the Nifty, with both the mid-cap and the small-cap indices falling in tandem with the benchmark indices. But the Nifty banking index, where the PSU banking index saw the losses, which were a little deeper than the rest of the markets. But ADRs continue to, fall, but the cuts are not as sharp as of yesterday. Wipro, Tata Motors, Vedanta, ICICI Bank all declining. And Dr. Reddy is actually advancing by as much as 2.2%. Now, moving on to your FIIs, today probably was the first day, or rather yesterday, in many, many weeks where the numbers have been very small, both for the FIIs as well as DIIs. So perhaps this is just a little bit of a pause before we take, a little bit of a breather. But pardon me. We did see the likes of Reliance Industries, HDFC Limited, Kotak Mahindra Bank and ICICI Bank. The financial sector as a whole in general, along with Reliance Industries, bearing down on the benchmarks. But it is expiry, and we will start looking at a lot of those rollover numbers. Of course, naturally, that's the reason why we're seeing a decline in the Nifty futures open interest, as is the case for the banking Nifty futures open interest as well. And moving on to your open interest distribution, we are looking at a 500-odd point range yesterday. Once again, we saw the 11,500 call take and make space as the one with the maximum open interest for calls. And that is largely on account of the writing in the calls that we saw yesterday at around the 11,500 and the 11,400 marks. But moving on to your India volatility index, it has risen further by around 2.5%. So keep an eye on that one. And we are also keeping an eye on the Nifty put call ratio, which on expected lines came off to around 1.46 against 1.59. Now, Adani Enterprises, Adani Power and IDBI Bank all, I would say, in the F&O band, Punjab National Bank and Reliance Power. One stock that moves out of the band is Jet Airways. Some very, very big news coming through post-market right at the end of the markets yesterday. So we perhaps could see a little more movement when it comes to Jet Airways, not only in its underlying stock, but also in its open interest. So keep an eye on that one. Besides these stocks, we're also keeping an eye on something like an LIC Housing Finance, Nestle India, ICICI Prudential, all of them seeing a significant increase in OI. On the losing end, that is a decline in OI. Again, this is where numbers will start getting bigger as we move into expiry. Bharat Electricals, Indian Oil Corp and ONGC. We have the entire oil and gas space buzzing off late, and it's been fairly volatile, so we'll be watching out for that sector as well, Alex.
Thanks so much for that, Agam. Well, let's quickly take you through what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
Brexit drama, which now sees Theresa May losing control of the process after conceding she does not have the votes to drive her twice-defeated deal through Parliament again. The Commons voted 329 to 302 to take power away from the Prime Minister over what happens next. Potential options now include a second referendum, keeping the UK inside the EU customs union, or even cancelling Brexit outright. The U.S. Transportation Department, meanwhile, is creating a special commission to look at how new aircraft designs are certified. This is in response to the grounding of the 737 MAX jet family. Now, the body will evaluate how the FAA oversees the process, including the growing trend of using employees of plane makers to sign off designs. Now, the review comes alongside a criminal investigation into the 737 MAX jet approval process. To Thailand now, President Xi Jinping. There's no clear result in Thailand. Both main parties are claiming the right to form a government, and the Electoral Commission is delaying the full vote count until Friday. Initial results show that the anti-military Thai Party is likely to win the highest number of seats, but the army-backed Palang Parachat may take the most votes. And combined with the military-appointed Senate, it could name the Prime Minister. Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
WTI hit that key $60 a barrel level last week for the first time since November, but did not manage to close above it. So we saw some technical selling there. Today, oil had been weighed down originally by sort of reports that we may be seeing this slowdown in economic growth, but the dollar's decline has also led oil to ease some of its losses.
Of course, when we look at a longer-term picture of oil, we're looking at the 3-month on NYMEX. We're well below kind of the $80 level that I think, if you probed OPEC, they would say is a better place to be, sort of the sweet spot potentially. How much power has OPEC lost to really get that oil price where they would like it to be, their optimal number?
Yes, you know, like you mentioned, in order for some of these nations like Saudi Arabia to balance their budgets, they need oil more like in the 80s, not in the 60s or below 60 right now on the WTI side and even Brent side. But we do have these supply disruptions in Venezuela that are really coming to the forefront here. And Citigroup today even raised their Brent price forecast for the year to $70 a barrel, saying disruptions in nations, including Venezuela, will likely lead to oil prices to spike.
Jet Airways is all set to come back with its seats. In an interview to Bloomberg Quint, the deputy CEO of Jet Airways, Amit Agarwal, said that it will take at least 3 to 4 weeks for it to ramp up the fleet back to 75% of its original fleet size. Now remember, in the October-December quarter, they had 120 odd aircraft, and they're expecting that nearly 65 to 75% of that fleet size will be back on air in the next 3 to 4 weeks. Jet Airways got 1,500 crores of cash infusion from lenders as debt, and this would be used to pay off some of the lessors and creditors so that it can resume operations. The Agarwal also told Bloomberg Quint that there will be immediate effects which will be seen on the ground with more seat capacity added in the next few days, and that would also mean that revamping the entire operations ahead of the summer schedule, which will be submitted to the DGCA, which is Director General Civil Aviation. In the next 2 days, you will see ramp up and happening and higher utilization of aircraft, including coming back of some of the international routes which Jet had suspended because of cash crunch and aircraft being grounded.
So time is of essence because the condition of the company is such a scenario. Lenders would like that they exit this investment as quickly as possible and give the chance to the new investor to revive it. But Jet Airways, lenders believe that it is a great brand, it has great value, and the time which was wasted in ironing out the differences between the promoters, it led to this situation where the jet is in today, but it can be revived. We are very confident about it. So this is the priority funding which is needed, and this will be sufficient to revive the Jet Airways in our assessment. And this funding is, as I said, just for 2 months cushion we have kept. And then once the new investors have formed up their mind, so there will not be much of an issue. The structure of the restructuring of the equity and debt is in such a manner that the facility which is being proposed is fully secured. It will be likely a 10-year instrument, the details of which will be made. And it will not be a listed debt instrument. It will be an unlisted debt instrument.
There are a number of stocks that we're looking at today, starting with DLF. The QIP opens today and the company to sell shares at 183.4 rupees per share. They will raise up to $460 million by selling 9.69% of equity capital. ICICI Prudential Life's promoter to sell 3.73 crore shares in the company. The floor price has been set at rupees 300 per share, and which is at a discount of 6.8%. Kalpataru Power Transmission acquires 85% stake in a Swedish EPC company for $24 million. UCO Bank's board approves preferential issue of 175 crore shares at rupees 19.01 each to Government of India. Then we have Prabhat Dairy. Competition Commission of India approves the scheme of company's sale of its dairy business. The company says no proceeds will be deployed towards the animal nutrition and cattle feed business. MEP Infra Developers enter into concession agreements with NHAI for 3 highway projects in Maharashtra. Financial closure for 3 projects worth 1,402 crore rupees has been achieved. Lastly, let's have a look at the bulk deals. Steenberg India Emerging Opportunities Fund acquired 5.25 lakh shares, which is 0.72% of Security and Intelligence Services at 829.92 rupees each.
On the big brokerage calls for the day, first we have is HDFC Life. Goldman Sachs has initiated a buy rating on the stock with a target price of around 488 rupees. Now, according to the brokerage, HDFC Life will remain a dominant player in the highly profitable and competitive protection segment. Now, the company has a de-risked business model and an ability to tap into the profitable protection segment, says the brokerage. Now, on the back of this, it is expecting HDFC Life's VNB, that is the value of new business premium, to grow at a compounded annual growth rate of 27% over FY19 to FY22 versus a 20% growth rate of peers on the same time period. Now, it is also expecting the company's margin to expand as it builds its proprietary channel and broadens its distribution base. Lastly, it says that the premium valuations of HDFC Life would sustain given the strong growth and strong distribution capability of the companies. The second we have is on SBI Life, where Goldman Sachs has initiated a neutral rating with a target price of 639 rupees. Now, according to the brokerage, SBI Life's key competitive edge is in the savings business segment is its large, profitable and relatively untapped bank distribution channel. Now, on the back of this and a healthy premium growth, the brokerage is expecting the company's VNB, that is the value of new business premium, to grow at a CAGR of 17% over FY19 to FY22. However, it still remains neutral on the stock as it believes that the company may face challenges given an underdeveloped direct channel, lower income customer base and higher pricing. Now, this would also limit the company's margin upside because of these reasons.
We knew which shows were coming every time that a new show went into development or was closing in on filming. Apple or the producers and actresses involved would very publicly announce these deals. We knew that this was going to be some sort of subscription service. We knew it would be premium. We knew it would be high-end. What we didn't know were 2 basic things. How much would they charge for it? And we didn't know which devices it would be supported on. Now, Apple didn't come right out and say it, but my sense is that these shows are going to be available on the Samsung, Sony, Vizio, and LG TVs, in addition to the Amazon and Roku boxes, besides Apple's devices. But no word on if these are going to be on Amazon and Android, of course, phones and tablets. We also didn't know price. They didn't really talk about the price. I'm not sure they're 100% certain what the price is going to be. And they didn't really discuss pricing for the Apple channels. And by the way, same name as Amazon channels for the same basic feature. So we'll be waiting on those. That's what investors care about, prices and the comparison to Netflix and Amazon Prime.
Pay using Apple Card. You get daily cash, not a month from now, but every day. So every day you spend, cash is added to your Apple Cash Card, which is also in the Wallet app. And it's cash, like real cash. So you can do anything with it. Every time you pay with your iPhone or Apple Watch, you'll get 2% of the purchase amount in daily cash.
So aside from Oprah, that was actually my favorite line of the entire event. It's cash, like real cash, Mark. This is something that we weren't necessarily expecting. Apple is getting into the credit card business, trying to change the credit card business. And actually, a lot of things they're offering make a lot of sense. And consumers are probably going to be pretty excited about this. I mean, no fees, no late fees.
Yeah, they hit a lot of the pain points here. One of the foreign transaction fees, the late fees, the annual fee. I'm a credit card buff, and you could cycle through tons of credit cards to get the best sign-up bonuses and different cash back percentages to optimize in spending. But what we're seeing here is 2% flat rate through Apple Pay, and that's actually the highest in the industry from what I believe for a flat rate, but that's only from using it with your phone. So places that you have the physical card, which by the way, of course, looks like it comes right from Apple with the titanium and the laser etching, is only 1%. So if you're in an environment where you have lots of Apple Pay around you and you want a high cash back, I don't really think there's a better card on the market for this, but there's other cards that have better optimization for depending on places you're using the card.